Roland, thank you very much for joining us. Let's get started then. You've mentioned this morning, you've announced this morning a wind down of your activities in Russia. Tell me the rationale for that and how many staff you have in Russia. How big is the business still in Russia?
Well, let me start in saying that Siemens delivered a strong performance in our Q2, and we were able to confirm our guidance for the fiscal year 22, despite a challenging environment. And now coming to a question talking about challenging environment, we decided to ramp down our industrial business in Russia. And that impacts our numbers. This impacts our numbers with a 600 million net income impact, but it's mainly non-cash. So all in all, just coming back to our Q2, strong performance shows in the top line, 22% growth in order intake and 7% growth order intake in revenue. Without the Russia effect, it would have been 9%. And talking about strong key free cash flow, it's a 1.3 billion free cash flow, which we are very happy about it. Now coming to Ukraine and our Russian business, we condemn the war, and we decided, obviously, from the first day to fully comply with the sanctions and now to wind down our industrial business.
You've been there for 170
people in Russia which are affected.
Yes. I was going to say, Roland, you've been there for 170 years, I understand. So you've given me the number of people that are there. How long will it take, do you think, to wind down this business?
We do that in an orderly ramp-down process. It depends on whether or not, for example, in the service business, our customers would take our team and take over our service team. So therefore, we have no view on that, and we make it in an orderly process in order to really respect what our people in Russia did for the company and for our customers in the past. We do that also respectfully regarding our customers. So we gave them, for example, in our service business, a lead time of 4 weeks to say, and that now we stop our operations. We do that. It's a tough decision after being 170 years in the country, but there is no alternative, and it's very clear that this is the way how the sanctions are supposed to work.
Europe is currently discussing an embargo on Russian oil. There's an intention to implement that. After that, there's considerable exposure to Russian gas, of course, for Europe, European consumers, European businesses. What impact would an embargo on Russian gas have on your company? Have you made preparations for that kind of eventuality?
Yeah, so let me start saying that Siemens is a low energy intensive company. So our global footprint is roughly 400,000 kilotons a year. So we are not that intensive, and we don't rely too much on gas. It's more electricity what we buy. So therefore, the impact on Siemens itself directly is minor, or even nil. The problem would be our customers. So in energy intensive industries, which we are serving, obviously, like chemistry, like cement, metals, glass, that would have a severe impact. Oil less so, because we see there are alternatives. Oil is a little bit easier to get. For gas, it would be very difficult. We studied that intensively, and we figured out that a gas embargo would hit the industry of Germany badly, and it would really have a huge impact in terms of shutting down sites, unemployment, and of course an impact on our economy too. So therefore, so far, we don't see that. Our government works on coal and oil, which has an impact. But we should also have in mind that sanctions should have more impact on Russia rather than on our economy. So we have to watch out closely.
I noticed this morning that you've confirmed, and you mentioned earlier, you've confirmed your outlook. Are you seeing any signs, I wonder, of demand destruction in any of your markets, Roland, given we're in a rising interest rate environment now in many parts of the world, and costs for many of your customers will be on the rise, and for you, I'm sure. So are you seeing demand destruction? Are you concerned that demand will be destroyed?
So coming to confirming our outlook, yes, we do confirm our outlook, and for the top line, we even increased it. You know that for our industrial businesses, we guided mid-single-digit growth in revenue. Now we guide 6 to 8%, and we increased our top line guidance for industry to 9 to 12, for smart infrastructure for 6 to 9%, and mobility, obviously, we guide now flat because we have the Russian impact. So therefore, you can see that we still believe that the growth momentum, which we have, reflecting obviously our strategy on digitalization, sustainability, and supporting our customers with a proper portfolio, is in place. However, we see eventual impact in our numbers on Q2 coming from Shanghai lockdown. You know, this is a complete lockdown now for 5 weeks. So we start ramping up again our manufacturing sites, which is good. On the other side, we have a bottleneck in the supply chain. There are 30% of the ships waiting to be unloaded are sitting in front of Shanghai. So we have a supply chain topic too. And that can have an effect really on how fast we can ramp up and compensate for this lockdown in Shanghai. We also look into other cities. So it's mainly China we're looking into. We have a slight impact also on our other manufacturing sites. For example, in mobility, we could not get enough people on site also in the United States because of Omicron. Okay. So the infection rates are increasing. So hence we have left people. But overall, we believe that still having all that in mind, if China and Shanghai would ramp up within May, we come in with our guidance as we give it forward, a slight increase. But if there's really a broader lockdown, then we have a different situation.
Okay, so we'll look to China for guidance there. Can I ask you finally, Roland, how customers react when it comes to putting up prices? What kind of pricing power do you have at this point?
So this is a good point. You know, inflation is going up. Prices we talked about it, for energy are going up. We have a shortage in supply of semiconductors. So this comes with a price increase. And overall, to answer your question, we believe that in total for the year, but also for the quarter, we will have a positive impact if it comes to price versus cost inflation. This is the good news. We do that mindfully to serve our customers and do not impact our customers too. So therefore, it's walking a thin line. At the same time, again, we are able to cover that. We do, and we can deliver. Currently, I have to say, okay, coming to customers, for example, for PLCs, for industry processors and computers, it's more about delivery rather than price. It's really a huge bottleneck. It's a whole pipeline which is built up. So therefore, we are very confident. And we see that also coming back, for example, to automation, our automation business. This business grew in Q2 by 16%. And we can deliver, so we capture market share. So therefore, that's okay. A good news too.
Roland, thank you very much. Thank you very much for your time.
Thank you too.